Welcome back, everybody. These next set of flashcards are going to cover real estate finance. Look for the finance section inside of your real estate exam outlines, PSI, Pearson VUE, Prometric, whatever you're taking, and you're going to find these pretty helpful. Without further ado, let's get into real estate finance. Balloon payment. A balloon payment is a large lump sum payment due at the end of a loan term where the regular payments have covered only a portion of the principal balance plus interest, leaving a substantial balance to be paid off in one final installment. Closing disclosure, or CD. The closing disclosure is a detailed document provided to the buyer by the lender that summarizes the final terms and costs of the mortgage loan, ensuring transparency and compliance with lending regulations. Debt-to-income ratio, or DTI. The debt-to-income ratio is a financial metric used by lenders to measure a borrower's monthly debt payments relative to their gross monthly income. ECOA. ECOA stands for the Equal Credit Opportunity Act, and it prohibits discrimination in lending. Federal Housing Administration, FHA. The FHA is a government agency that provides mortgage insurance on loans made by FHA-approved lenders designed to make homeownership more accessible to more Americans. Not a lender, but rather an entity that provides mortgage insurance on FHA-backed mortgage loans. HELOC. HELOC stands for Home Equity Line of Credit, a revolving line of credit that allows homeowners to borrow against their home's equity as needed. Hypothecation. Hypothecation is when a borrower uses their property as collateral to obtain a mortgage loan, giving the lender a claim on the property if the borrower defaults. Interest. Interest is the cost of borrowing money from a lender, typically expressed as a percentage of the principal loan amount. Kickback. Kickbacks are payments or compensation given in exchange for referring or steering consumers to specific service providers. Kickbacks are often considered to be an unethical business practice. LTV. LTV stands for loan-to-value ratio, compares the amount of the loan to the appraised value of the property being purchased or refinanced, often expressed as a percentage. Mortgagee. The mortgagee is the lender or financial institution, i.e. the bank, that provides the loan to the mortgagor and holds the legal right to the property as security until the loan is fully repaid. Mortgagor. The mortgagor is the individual or entity that borrows the money, i.e. the home buyer, from the lender to purchase a property and pledges the property as collateral for the loan. Note. A note is a legal document that outlines the terms of a mortgage loan, including the amount borrowed, the interest rate, and the repayment schedule. PMI. PMI stands for Private Mortgage Insurance, is a type of mortgage insurance sometimes required if you have conventional financing without meeting a minimum down payment amount. Primary mortgage market. The primary mortgage market originates mortgage loans directly to borrowers. Savings and loans, commercial banks, mutual savings banks, life insurance companies, mortgage bankers, and credit unions all make up the primary mortgage market. Promissory note. A promissory note is a legal instrument executed by the borrower stating the debt amount, loan terms, method and timing of repayment, interest rate, and promise to pay. Regulation Z. Regulation Z is part of the Truth in Lending Act. It helps consumers understand the true cost of borrowing money by requiring lenders to disclose borrowing costs, interest rates, and fees up front. Real Estate Settlement Procedures Act, or RESPA. So RESPA is a federal law that aims to protect home buyers and sellers by providing accurate and timely information about the costs associated with real estate transactions. It prohibits kickbacks or referral fees and ensures transparency and fairness in the real estate settlement process. Secondary mortgage market. The secondary mortgage market buys existing loans to provide liquidity to primary lenders. TILA. TILA stands for the Truth in Lending Act, a federal law that requires lenders to provide borrowers with clear and accurate information about the terms, costs, fees, and conditions of a loan, including the annual percentage rate and repayment terms. TRID. TRID is the TILA-RESPA Integrated Disclosure Rule. TRID is a set of rules implemented under the RESPA and TILA laws to simplify and improve the mortgage loan disclosure process. It requires lenders to provide borrowers with clear and standardized forms to help them understand the terms and the costs of their mortgage loans. Trust deed. A trust deed, also known as a deed of trust, is a legal document that is used to secure a loan on a property by transferring the legal title to a trustee until the loan is repaid in full. Underwriting. Underwriting is the process of evaluating a borrower's creditworthiness to assess the risk associated with the lender providing them a loan. Usury. Usury is the charging of excessive interest rates on loans.